I know we haven't talked about Fubo in a while on this channel, and that's my fault, my bad, I apologize, but hey, I'm here right now, just in time to talk about the latest Fubo updates. We're going to be talking about why the stock has been down, at which point I will be addressing the major concerns that investors are voicing for Fubo. We'll even be talking about Rich Greenfield, Ark Invest, Draftkings, yes, all still very much related to Fubo. We'll be looking at price targets, upcoming catalysts, and we'll even be taking a look at how I've been playing Fubo and maybe how you should consider playing Fubo right now. All this and much more. This is a video that you're not going to want to miss, so stick around because we're going to be starting right now. Hey, what's going on? It's Pat from Top Ticker Trades. If you're new here and you want to learn how to use stocks and options to make your portfolio go parabolic, make sure you start now by subscribing and tapping that bell so you never miss an upload. What is going on, ladies and gentlemen? Welcome back to the channel. Welcome back to yet another video about Fubo. How exciting. I'm back reporting on Fubo again. I'm sorry it took me so long, but my man Kevin Sun, well, he kind of reminded me it's time. You're way overdue. We need another Fubo video from you. So Kevin Sun, my man, this one's for you. And why in the hell would Kevin Sun want to know about Fubo? For starters, this platform has over 50,000 live sporting events, the most expansive RSN portfolio, the largest football package combined with NFL and college football. Who in their right mind wouldn't want to know more about Fubo? Who in the hell would want to pass up this golden opportunity to invest in a stock like this? But is right now the time to invest? Well, let's talk about it. But before we talk about it, ladies and gentlemen, and before I forget to ask, could you please go ahead and smash that like button for me? It greatly helps out this channel. It's always appreciated, and you know, it would make you a hero. But that's enough. I'll go ahead and get started with this video. So here's the deal with Fubo. And the first reason we're going to discuss is going to be the obvious or most obvious one. And we saw that pretty much every single spec stock, every growth stock in the market took a pretty nasty beating. And Fubo is no exception to that. It's not immune to any of these market conditions. It's got to pay the piper just like every other growth and speculative stock. So what are the reasons that are most obvious? Well, those would be the inflation concerns that everybody was ranting about. And it would also be that great rotation that we have heard so much about. But these are all pretty much risks that are associated with the broader market in general. So let's talk about some risks that are specific to Fubo. So the first risk that's specific to Fubo that we're going to cover is the concern over greater than expected losses reported during earnings. Should you be concerned about this? Well, in order to figure that out, we first need to know what was expected. And we see that Wall Street expected a negative 73 cents per share, but unfortunately, Fubo came back with a negative $2.47 EPS, which translates into $570 million worth of losses. Sounds pretty darn bad, doesn't it? So a lot of that was actually non-cash, and essentially they took an impairment on Face Bank assets, which was between $220 and $250 million, which means that this number comes down very quickly. But before I go any further, let me explain to you what an impairment is, in case anyone here is not familiar with the term. So it essentially describes a reduction in the value of a company asset, either fixed or intangible, so as to reflect a decline in the quality, quantity, or market value of that asset. So if the recoverable amount is less than the carrying amount, the asset is written down to its recoverable amount. And the write-down is essentially called an impairment. The impairment loss is an expense in the income statement and depreciation, and plans for fixed assets that are impaired must be adjusted for future periods. There was also a stock-based compensation that was roughly in the amount of about $50 million, and there was a revaluation of warrants to fair market value, and a lot of that was actually intangible, meaning that the actual cash expenditure was significantly less than we would expect. And digging a little bit deeper just to take a look at some other metrics and see how this company is performing overall, or to get a better idea, We see that in 2019, operating costs were equal to 100% of revenue. But when we compare the Q4 2020 operating costs, we see that this number came down to 86% of total revenue, which is a pretty good sign. And in layman's terms, this means that we're seeing the operating leverage there as the company continues to scale. So something else to consider here is that you're not going to see any impairment next year because Fubo pretty much wrote down everything on the FaceBank side. And with this being said, you can expect that the numbers are going to be much stronger than they appear to be. So I want to take a very brief moment to talk about FaceBank real quick because I do realize some of you guys may be new and don't know what FaceBank is. Well, if you do know what a SPAC is, Fubo went through a merger to go public, something similar to a SPAC merger, and FaceBank was the company that took them public. So FaceBank was essentially a tech company. It had some digital assets that maybe at the time Fubo thought that they were going to leverage, but at some point after the merger, they decided not to leverage them. And who can blame them? They've moved on to more important things such as wagering. So they kind of don't really need those assets that they, I guess, inherited, you could say, from FaceBank, which is why they decided to write them down, which is actually a good thing because that means that they're recovering some of the losses that they would have had, and they're going to get more upside from this. But what about the opportunity that Fubo has in the future, in the very near future to be specific? Well, there's the gambling opportunity. So Fubo has a video product which collects a ton of data, and they found out through this product that 90% of sports bettors watch video, and 96% of the Fubo subscriber base watches sports. But there seems to be even more green grass at the end of the pasture, because when Fubo used this same product to survey their audience, they found out that 22% of this audience is willing to pay $100 per month in order to use the Fubo Sportsbook. So what it means is that Fubo is differentiated from its streaming competition in a significant manner, and at the same time, it sets them apart from even the wagering companies, these much bigger wagering companies. So as Fubo's CEO would say, this is geared towards enhancing entertainment and allows for a more active viewing experience. All right, so I guess we can move on and talk about some of these other concerns that have been expressed by, Fubo shareholders. And in order for us to do that, we're going to need to look at the haters, the people that are hating on Fubo. But lucky for you and lucky for me, we don't have to spend a lot of time doing this because all we need to do is take a look at the main hater. And his name is, what is that ass clown's name? Oh, yeah, Rich Greenfield. So, by the way, Rich Greenfield, I did make a video on him. You guys do need to go back and watch it if you haven't seen it. I will have it up on the end screen for you. It is a beautiful, beautiful, wonderful video about a clown. A clown that should have been named Bozo, but his parents were not aware of what he was going to grow up to be. He's an analist, okay? And this guy, he puts out price targets that are very inaccurate. He's ranked, at the bottom of his class. If you want to compare him to any other analyst, he's pretty shitty. But here's the deal with him. So he's made some predictions, some assumptions that are incorrect and will probably always be incorrect. But while we have high price targets on Fubo of $60 that come from other analysts, and as low as $35, which I thought were pretty, conservative price targets, this ass clown comes out and he gives Fubo an $8 price target. Now, why the hell would he do that? Is it because his grandmother's shorting Fubo? I would imagine it is, because he says, oh, no, we're not allowed to take positions on the companies we cover. Okay, but your grandmother is? Answer me, sir! Okay, so anyhow, this guy, he gives it an $8 price target. Now, this was right around the time of the Fubo shareholder lockup expiration period. So we know when this usually goes on, the stock is going to experience a lot of volatility. It's going to have some, selling pressure. So this ass clown tried to take advantage of it. He tried to beat down our beautiful Fubo, and that made me very sad. It made me angry, and it hurt my feelers. But what really hurt my feelers, guys, is when this ass clown, when he blocked me on Twitter. Now, I don't know how any human could do this to another human being. Being blocked on Twitter is one of the most serious offenses known to man, and it hurts people's feelers. So please don't ever, ever, ever be like Rich Greenfield and block people on Twitter when they call you out for being a moron. Okay, I'm sorry, guys. I had to, vent a little bit. But anyways, so here's what's going on. The reason I'm bringing this Ask Clown up is because he makes a wonderful point. He says that what Fubo's trying to accomplish will never pass regulation. And his reason for that is this, okay? Imagine this scenario. You're sitting around with your kids. Y'all are watching TV or you're watching Fubo, okay? And your child grabs the remote and just starts placing a bet from your account with the family remote on the family TV. Oh my word, what do you do? How do you prevent that? Well, let me ask you a question, people. Do you have a Robinhood account? Do you have a Webull account? What brokerage do you use on your cell phone or computer or whatever when you're trading stocks? And I really don't care to know the answer. The answer that you need to give me, though, is this. Do you use a 4-digit PIN? Do you use a 6-digit PIN? Do you use a thumbprint? Maybe you're using your toe print or your pinky. Hell, I don't know. Whatever you're using to access your account in order to purchase or sell equities, how hard is it? Okay, why don't we do that with Fubo's platform? That's the million-dollar question, but perhaps, in Rich Greenfield's defense, he's not aware that we have this type of technology, but the world has advanced. I'm pretty sure this guy, he's still living with his grandmother in his grandmother's basement, in her closet in the basement, and he's still using like a rotary phone. And he's calling like the brokers, and he's like, "Hey man, I want to place an order. I would like to short Fubo stock, please." So that's one challenge, and I certainly do understand it. And, there's only a couple of reasonable explanations for this. One, he just doesn't have the vision. Or two, maybe he's just a hater and he's going to continue to hate. But here's my next point. So, what do we see that validates this technology and that tells us that it's going to work? Well, we see that Draftkings is doing it. And while we're on the topic of Draftkings, let me first address this. So you guys, I'm sure, are familiar with our dear Aunt Cathie Wood and Ark Invest. Well, they're very heavily invested in Draftkings. But why would they be invested in Draftkings? Well, they think that this is a very innovative company that's got the potential to disrupt the industry. But why would they think that? Well, it's because they've taken initiative. And how have they taken initiative? Well, by doing it, like I just told you. But what exactly is doing it? What does that mean? Well, we know that Draftkings and Dish are in a partnership that was recently announced. And what is this partnership all about? Well, when you've got a sports betting company that's partnering with a media company, you're pretty much essentially trying to do the same thing as what Fubo is already doing. So what does that tell us? Well, that gives us validation. That validates the technology and everything that Fubo is doing, and lets us know that it's all good, man. It's all good in the hood. You understand? But unfortunately, this brings up another concern. This is a concern that Fubo shareholders have been voicing, and this is one that's affected the share price and is still affecting the share price. And I'm sure that a lot of you, and I did bring up the partnership between Draftkings, which is a much bigger company financially, and Dish, you guys may have been a little concerned. So here's why you shouldn't be concerned, though. Number one, there are regulation issues that pretty much prohibit one company from sending sensitive customer data to another company. So this is what gives Fubo the advantage, or one of the reasons they have the advantage, because they own both of their platforms, so they can create a seamless experience. And that's why with Fubo, you can go ahead and place a bet through just one app. The information is already there. So it gives Fubo a lot more flexibility. In addition to this, Fubo is also able to, or they do all their programming and coding in-house. So they're able to solve all these programming issues on their own, create a better experience for their customers because of this. The team understands, the team understands the industry, and they understand exactly what needs to be implemented in order to drive or deliver that better experience to their customers. So we know that Fubo recently entered into an agreement with Marquee Sports Network, and that allows them to carry the network's programming in the Cubs market territory, which will include non-nationally televised regular season Chicago Cubs games, the pregame and postgame shows, exclusive content, original programming, and a lot more. So previously, I think this has only been available to AT&T customers. This is a big deal because it's gonna help Fubo's subscriber base to grow a lot more, which is what we want to see. They've consistently been growing. Their revenue has been growing, tremendously. Their subscriber base has been growing a lot. I mean, everything that we would want to see out of a growth company, a growth stock, has, been taking place so far. So there's nothing to be discouraged about. You should not be concerned about the Fubo price. If it drops more, buy more. I told you this last time when Rich Greenfield was putting out his $8 price target. Fubo was shorted heavily. A lot of people were a little iffy last time, but, it all worked out. If you bought when I told you that I was buying, then you would have stood to profit a lot, profit significantly from that. And, I'm doing it again. I'm telling you again that this is a buy at these prices. If it does come down, don't sweat it. Now, this is only if you're a long-term investor. This is, of course, a volatile time in the markets, and this is a volatile stock. So, it's up to you. I can't make that decision for you. I can only tell you what I'm doing. Now, I own a significant position in Fubo already, so I don't necessarily need to buy shares. How I acquire my shares right now is simply by selling puts. So I just sell puts against not only Fubo, but any stock that I want. And it pretty much works out very well for me. Either I get to keep the premium, which in this case is pretty nice right now, or I'll get to acquire the stock at a much lower price. And I just continue to do that. Eventually, chances are you will be able to acquire the stock at a much lower cost basis, or at a much lower cost. And of course, you can select your strike price based off of, whether you actually want to have a greater chance of acquiring the stock or not at expiration. Now, another thing that you can do is selling calls on your position. So if you have 100 shares, or I guess I could say for each 100 shares of stock that you own, you can sell a call. However, for Fubo right now, the call side doesn't have a lot of premium there. It's just not really that juicy, not very attractive. So you have a decision to make. Now, often when I talk about selling options, people will ask me, well, which options should we sell? Which strike do we sell? It's really up to you. You have to make that decision. I can't tell you which strike to sell because you have to decide what you're good with. So let's say, that you own the shares. If you really care about keeping those shares, you probably might not want to sell premium right now as far as, selling calls is concerned, because if the stock does run up, or at least if it reaches your strike price and you get called out on those shares, yeah, you may make a profit off of that, but the profit isn't going to be as significant as it would be if you would have collected a lot more premium. So then essentially you're kind of losing your shares and not for very much money. So you have to make that decision and see if you want to take the risk of losing those shares by collecting the small premium, or maybe you could sell like a very crappy call that's really out of the money and collect even less premium to pretty much ensure that you collect something to reduce your overall cost basis, but that you don't get called out on your stock. Now, another thing that can happen, even if you do sell a really far out of the money call, if the stock runs up, then that call is going to be worth a lot more money. And, if you would have just waited till the premium comes in on the call side, you potentially would have been a lot better off. because you would have been able to sell that for a lot of money, but you never know what's going to happen in the market. We can only pretty much speculate. So it's up to you, but these are all great methods of generating, a consistent income. Now, guys, I think that's about all that I've got for you today. Don't forget that on the end screen, I will be putting a link to the Rich Greenfield video. I really want you guys to check that out. Let me know what you thought about that. If you have any questions or anything you want to say, feel free to say that in the comment section below. Please go ahead and smash that like button if you haven't already. And if you're not subscribed, I really need to ask you, what are you waiting for? You're going to get videos or access to videos just like this every single day. And if you tap that bell, you're going to get notified as soon as I drop a video. And, we've really got a wonderful family of subscribers here that work together. We have a great time in the comment section. And I really look forward to getting to know you. So join our family, smash that like button, tap that bell if you want to be notified when I drop a video. While I have you here, I wanted to quickly tell you about the brand new First Trade app, available for mobile or PC. The platform will give you access to powerful and easy to use tools and allows you to trade with less restrictions, zero commissions, zero fees, and you can use the first link in the description below to download a free stock today without having to deposit any money. This will greatly help out the channel and is always appreciated. And now back to your regularly scheduled programming. Congrats, ladies and gentlemen, you've made it to the end of the video. If you like what you watched, make sure you subscribe because I put out videos just like this one every single day. And please do me a favor and smash that like button if I helped you in any way, because it really goes a long way in helping the channel out and keeps me motivated to make videos every single day. Now, there's a lot of work involved, a lot of research, and a lot of time and effort into editing and putting these out daily for you guys. You can subscribe from your screen right now. Or if you want to watch one of my other videos, I'm sure YouTube has some good content picked out for you on the left-hand side of your screen now. Thanks for sticking it out with me till the end, and I will see you guys in the next video.